leave interest rates unchanged for the first time since July. The two Fed governors appointed by President Trump disagreed with the move, mirroring Trump's call to lower rates.
The Deal Room.
Welcome to another segment of the Deal Room. This evening, we are going to really be delving into, funding in general, the Fed pause, high rates, and, just mortgage and MCA.
The Fed has decided to take a pause. And then mortgage rates, which is very much the focus of the president and everybody else because they've been so high, do come down a bit with the Fed, but the Fed doesn't directly control them. They're a little over 6% at the moment, and so you shouldn't expect a major decline. This is not obviously going to make it easier for would-be home buyers.
Today's topic is mostly going to be about mortgages, right? And I think that we've gotten this month has actually started off to a good start.
Yeah.
And I think it's because rates have actually been dropping. Rates have been dropping, correct, Joe?
Yeah, rates, especially for investment properties, is most of the products we offer. I'll say a year ago, some of these rates were 7.8, 8%. Now we're pretty close to low sixes, mid sixes, not too far off from what you're going to get on a conventional loan, on a conventional purchase. But, we don't require all the same documents. But yeah, rates are around like mid sixes right now, mid to high sixes for a purchase. If you have a lower LTV, let's say if you're putting more cash down, or if you're refining, you're not maxing out your LTV, your loan to value. You're going to get a pretty good rate. I had someone quoted at a 6.25 the other day on refi.
I think the lowest I heard was 6.1875, what Stanley told me a couple of days ago on an investment property.
Now, is that the lowest that the rates have been in like quite some time?
Yeah, definitely. Because I remember closed a deal. It was actually a property I acquired with my family like mid 2024. Great credit, like 50 LTV. That was 7.8%. So that's pretty high for a low LTV like that. So even now, 70 LTV, what that means, let's say your property for round numbers is worth $1 million, 70 LTV means your loan amount's $700,000. Or even for some loans at 80% LTV, I've seen low rates in the sixes. So it's pretty close to what a FHA and conventional rate is going to be. So we're getting that on investment properties right now. So it's pretty good for investors out there.
I think the FHA actually, from what the last thing I saw online was at roughly it was below 6, which was
High
crazy.
fives.
It was insane. Yeah. When you look at it, we look at something called mortgage rate daily. So on that, if you go on there, it tells you the average, and I think the lowest was at 5.8. 5.81%.
Yeah,
Wow.
for a 30-year.
For a 30-year. Yep.
Wait, time out. So if it's 5.8 on a 30-year, if somebody took a 15-year, does that mean that the rate? How does that work? Does that mean that the rate
even lower? Yeah, even lower, because your monthly payment's going to go up no matter what. 15-year, it's a lot less time, so that payment is going to have to increase, but the rate's going to drop on a 15-year always.
Yeah. Nice. All right, Jose. So I mean, listen, you are the Coles. This is probably like a mortgage, heavy on the mortgage base side tonight. Yeah. So you want to kick off? Where we're gonna go first?
All right. So today, as you mentioned before, the Federal Reserve has paused, the rates, and I think one of the discussions Joe and I were having, and please let us know what you guys think, right? Because what was it? Is it that the Fed paused raising the interest rates, or the Fed paused lowering the interest rates?
Lowering the rates. Everyone wants the rates to drop.
Right.
And Trump was about to fire the head of the Fed, what's his name, Jerome Powell, because he's not dropping the rates fast enough. They have been dropping the rates, but for now it's going to slow down. They've paused it. So it is what it is.
So does that mean that like a homeowner can does that mean that a homeowner can lock in like a 6.5 mortgage without worrying about it jumping next week? Or
yeah, it should stay pretty steady as long as your credit is decent and you're putting down for an investment property. You usually have to put down 20% for a single family. So as long as you have some cash, you're liquid, and you have a good credit score, around that middle sixes is realistic for you.
So things are a little more. So with them pausing, lowering the rates, that means things are going to be stable for quite some time. Is that kind of like the gist of it?
Yeah, everyone is missing out on the days of COVID. Everyone is imagining rates are going to drop back down in the threes and whatnot. So when the Fed starts lowering rates, from high sevens to now consistently, now we're in the mid sixes, low sixes. People are expected to keep dropping, but it's not realistic. It can't happen that fast. So it's going to happen gradually. But if you look at rates historically, I mean, there are times in America where rates are like 10%.
Yeah.
There are times where rates are 7, 8, 9, 10%. Everyone's just so spoiled from the time of COVID. People have nostalgia.
So what from a business standpoint, and from you as somebody that's like hitting the phones, do you see, like, when we speak about the Fed and their rates, do you feel like that's something that is like in the know with like a lot of your clientele or like a lot of your clients, or is it more something that you are kind of bringing to their attention? Do you feel like they're like knowledgeable, or is it more something like, hey, guess what? Rates are low, and they're like, yeah, I agree. Or something like, hey, Joe, I know rates are low. Here's what I need. Like, how is their demeanor kind of on the phone?
Well, I definitely feel like we've all been a lot busier. We all have a lot more calls coming in, clients submitting deals. So investors that are active in the industry, yeah, they're definitely looking at more properties. They're definitely looking for terms because they know rates have dropped. But yeah, some people are just not in touch with recent development, so they don't really know. Like, I had someone ask me for a 6.5 on an 8 unit the other day, and that's a commercial building. You can't get a 6.5 on the 8 unit. Maybe a 1 unit, I could have helped them out.
Yeah.
So
Also, too, a lot of investors and just I guess homeowners or borrowers, sometimes they're misinformed in a sense that they get too much information. Meaning, like, just the point that you made right now is that they can go online and say, it's funny because I received a text message from an affiliate. They're like, hey, listen, the rates dropped down to 5.8. Why is my rate, I think it was like in the mid sixes.
Yeah.
You have to remember that every scenario is different. Just because the rates have dropped, or let's say your friend across the street or someone that received a 6% rate, doesn't necessarily mean that you're going to qualify for the same type of rate. Right, so that's something that you always have to remember and keep in mind, because situations change, right? It's whether the property type, whether it's the state, whether it's your income, whether it's the loan to value, as Joe had mentioned. There's a lot of different things that would play a role into qualifying for that rate, right? So it always keep that in mind. Just because you see that the rate is very, very low, or at the lowest point right now from what it was a couple of months ago, doesn't necessarily mean that is what you're going to receive. Okay, so that has to be very, very clear for a lot of borrowers when they're going into that. So obviously, when you speak to someone, a mortgage professional, they should break that down to you as far as to why and what you would actually qualify for realistically.
Question, Jose. Yeah. Because again, I'm a novice, trying to ask you guys some questions, and I'm sure everybody that's at home has like some similar questions. They just don't really want to chime in. But is when rates drop, right? Is it harder to get approved? Like, or is it harder to get somebody approved? Does it not really matter?
So here's the thing: if rates are dropping, then your monthly payment should be dropping. So it's easier to get approved. But what happens when rates drop really quick? Everyone starts overbidding on properties.
Yeah.
So your rate may drop.
Competition.
But now there's competition. That 500K property, now people putting in offers for 550, 575, 600. So it's a balance. That's why it's nice if they're lowering the rates slowly and gradually, because
not like a drastic.
Yeah, and that's what happened during COVID. Remember when the rates were so low? People were overbidding for properties just because everyone could now go ahead and bid on that property. So you were actually, the property itself was selling for more money than what it was worth, right? And then look at Florida. Look what happened to Florida. A lot of places in Florida, homeowners in Florida now are underwater, right? And that term basically means that your mortgage balance or the mortgage balance exceeds the value of your property. So that's also something that can hinder factor that into the actual situation, right? You don't want to overpay. But to answer your question, Darryl, does the interest rate lowering, does it stop or does it affect it? Just to add to what Joe said, it does affect it in a positive way sometimes, because now you can qualify for that mortgage because your mortgage payment is lower. So now your income, right? Your income, if it's low, you may not qualify for it, because when rates went up, a lot of people that qualified for a mortgage at one point now did no longer qualify for it because their income could not support the mortgage payment, right? Because there's a certain percentage that has to be factored in minus your debt that appears on your credit report, but that mortgage payment increasing no longer made you qualify for the mortgage, right?
Gotcha. So right. So what you guys were saying before, saying that competition is increased and rates have lowered. Joe, does that what type of program? Like, is there a specific program that you guys are focusing on right now that's gonna make the most money, or is it kind of just like everything's kind of like up in the air?
Well,
Like, what is
I
it?
would say it really affects DSCR loans. So those are like the closest to conventional loans or FHA loans that we do. Those are just for 1 to 4 units, investor properties where they have tenants living in there. So, I mean, for fix and flips, I mean, rates are not going to drop to the six. It's not, those are bridge loans. It's going to be 10 to 12%. But yeah, definitely for DSCR loans, I'm seeing a lot more people reaching out to us for, trying to get terms because now we're close to the 5.8 or the 6.125 of a Fannie Mae Freddie Mac loan on technically what are hard money loans, what some people would refer to, but these loans are for investors, and now we're giving people great deals. Honestly, it really depends on finding a good deal, but I think it's a great time for someone to get an investment property.
Yeah.
Nice. So Stanley's typing in the chat, and he's saying, "Can you guys hear me?" I mean, I heard you unmute your mic for a second, Stan. But is there something that you did you want to chime in, Stan?
Can you hear me now?
Good.
You can hear me?
Yeah.
I've been trying to chime in for the past 20 minutes.
So good. Got your chocolate. We can hear you now.
I love it. Love the conversation we're having right now. I know Daryl asked a question. I just want to chime in. This is a great time to be an investor in this market. And even though people talk doom and gloom, with Fund Rock Capital, one of the best things we have going on is I want to highlight our A+ program, where, like Joe just mentioned, a very rare time in this market that our DSCR rates can compete with conventional loans, like Joe was saying. Like we just quoted a guy the other day, me and Jose, to pull a deal back. He was getting quoted at 7.5. We're able to give this guy a 6.125 rate as an investment property, not their primary. And let me just give you an example of why that's so pivotal in this market. If you go on Mortgage News Daily, which we track, it tracks the average rate for all of home mortgages in the United States. Now, for conventional 30-year loan, the average as of today is 6.16. Did you hear that? 6.16, the average mortgage in America right now, conventional.
Yeah.
And we're competing that with an investment loan, not owner occupied. Normally, there's always a half a point difference. So for us to be able to compete in that space with our rates, it's a gem out there. You know what I mean? And that's what we're giving to our clients and the opportunities we're giving. So when you're looking at these rates and people rate shopping, there's no reason to shop. I think we're the big boys in a small pond. And when I say small pond, I mean the market right now. Rates are coming down, a little bit volatile due to politics, but we're trading down. People aren't realizing how hot the market is, so we're not worried about a lot of competition. So this is the time that investors need to jump in the market with the products that we offer.
Interesting, Stan. So Stan, so you've been doing this for obviously quite some time. Is this what do you think this speaks for the trajectory of where mortgages are going to go for the rest of the year? I.e., they don't want to lower the rates anymore. They're the lowest that they've been in quite some time. What do you think is going to happen next, in your expert opinion?
I don't like doing predictions that much.
Yeah.
No one has a crystal ball.
Guesstimate as best as you can.
I think we're going a little bit lower. How much lower? It depends on politics at this point. Do I think we'll hit the fives? Yeah, I definitely do. But also remember, anyone in real estate knows the market's about to heat up no matter what.
Yeah.
Come June, that's when the homeowners, people owner occupied properties, are going to shop for homes to move. So there's going to be a lot of buyers come around June, July. Because remember, a lot of people that want to upgrade their home, move a different state,
Yeah.
they're going to do it when their kids leave school. So they have that 3-month window of pulling their kids when their kids graduate from whatever grade they're in, and then traveling and getting settled in another school district. So that's when the market's really hot. So for investors, this is the time to grab those properties before these rates and these shoppers come back into the market. There's qualified home buyers in the market right now, but either because of they can't move right now, whatever case may be, they're not hunting for a home. This is when investors need to buy up those homes, because once that wave of buyers, the owner occupied people, jump into the market
Yeah.
come June and July, I don't like saying this, but it's almost like a built-in automatic appreciation. Because now the houses next to you are going to go for sale by default. So keep that in mind.
I see a question from Peter Malazzo. How's it going, Peter?
Hey, Pete, what's going on, man?
Peter is
Thanks for tuning in.
one of my ISOs, so we've been in contact. Peter said he's having trouble getting leads. He's working LinkedIn. Any suggestions? Me personally, I would say get out in your community, go to networking events, anything, any events with real estate agents, real estate developers, contractors. You could meet contractors to let them know what fix and flip products we offer. You can meet real estate agents, ask them if they have any investors that are looking for non-owner occupied loans. I mean, we're beating the competition right now. I'm seeing other banks in the sevens, and we're in the low sixes, mid sixes for investment properties. So I would say just get out and meet people, meet accountants, meet any professional, any financial professional you can.
And to add to what Joe was saying, that actually is a good point. A lot of people miss networking events. I went to one towards the end of the year, and this particular one, it already had someone that was doing mortgages, right? I believe it was someone that worked at M&T Bank. And I spoke to the president. We were talking as far as to the programs that we offer, et cetera. But one thing that you have to remember is a lot of national banks, M&T, Bank of America, Wells Fargo, Chase, et cetera, they don't have a lot of the programs that we offer, right? Because this particular client was told by a bank, an actual bank, that he would not be able to qualify for the mortgage because the mortgage was the investment property. It's his investment property was under an LLC. So they could not do the deal, and he wanted to close under an LLC. So he did not qualify for that. It had to be in his personal name. Now, that's not true, right? We all know that, where if it's a commercial property, a lot of investors close it in an LLC because they want to remain protected, right? Because if you, let's say, God forbid, something happens where your tenant, or something happens where something happens to the property, and now they sue the property, or they sue the property, they're only going to be able to sue what's in the LLC. Right. So that's why a lot of investors put it in an LLC and not under his or her personal name. But, that's also something else that you'll be able to grab, because bankers only know what bankers know. Right. They don't know the different types of programs that we have available. As Stanley mentioned, we deal and we speak to a lot of bankers, but we also focus a lot on the alternative space.
Yeah.
Right. Whether it's a DSCR, whether it's being able to do no DSCR, which means that as long as the property itself has equity or value, we're still able to pull money out of it without it having to be rented, right? It can be vacant. So there's a lot of different things that we have to offer that a lot of people are unaware of, right? Where would you go? DSCR literally means, if you look at it, it means that the debt service coverage ratio, that the mortgage income, the rental income covers the mortgage. But if you have no rental income, how will that cover the mortgage, right? But we do have a program. It's called a no DSCR, in which we are able to do it. Whether the only thing that's going to happen is that loan to value is going to drop. One of the programs that we offer that's very popular with a lot of our clients is a 50% LTV. Property's worth $1 million. Let's say that the balance is $100,000. We give them a 50% loan to value, which means a half $500,000 approval. Subtract the balance, they're netting out the difference. Now, we don't look at credit for that particular program, and we do not look at rental income for that particular program either. It's strictly based on the asset. So there's a lot of different programs that you can actually stand out in a room of still mortgage professionals. If you're looking to do mortgages, just know the products and know what's available out there for you.
let me ask you guys this, both of you guys, and this could be like an open discussion. But like, if you guys weren't in the office and you guys weren't the people that were helping to fund these deals, and you guys were on the investor side, right? What would be a couple of different things a couple of different products that you guys would be focusing on right now that's going to make you the most money?
I would look into doing some fix and flips. I mean, we could do 90 on the purchase, 100 on the rehab, even if you don't have experience. All we ask to see is the general contractor's license, and the fact, they have to have insurance as well. But if you get a good deal where you're not overpaying for the purchase and you could get a good ARV, I mean, that's a great deal, because then in a couple months or 8 months, 12 months, however long it takes you to finish that product, you could either refi into a 6%, 6.25 rate on a 30-year, or you could sell that property. So I would be trying to get some fix and flips and refining the properties, taking cash out, selling the properties. There's definitely a lot of room for profit there. Or I would also just look for areas with good market rent value where I could purchase a property that's not too expensive. I know the rent will be a decent amount. I know the rates are low, so my monthly payment won't be too high. I wouldn't even be worried about cash flow. I'll look for a market where, the property is going to go up in value. That's really what I would look for. Some people look for month-to-month cash flow, I'm not trying to live off of extra couple $100 a month on the property. I want the equity in the property to raise, $100,000 in like 18 months. That's what I would be looking at.
What about you, Jose?
Honestly, I would stick to a product that I know a lot of people don't have access to. I would do no credit score requirement, 50% LTV program. And the reason why is because, no one really has a program for those.
You do it for yourself as an investor, though. They're all saying if we weren't lending, what would you do?
Yeah. So like,
if you were investing,
listen, we're on this side of the camera. Okay. We want to, listen, we're on this side of the camera, and we are speaking to everybody from just like, I guess, like the sales side. But like, what about if you were an investor on the other side of the camera and you were taking in all the information that we're providing, what would be something that you would focus on with the knowledge that you have if you were on the investor side, if you were on the other side of things, if you were making deals or you were moving and shaking, like what would you focus on right now to make you the most money?
I would honestly, I would want to make sure, like Stanley would say, I would want to make sure I get the bag first. So I want to make sure that I have access to the funds. I would focus on credit cards, to be honest with you. 0% interest business credit cards, make sure that I can qualify for that, because I would be able to qualify for up to $150,000, right? So why wouldn't I want that 0% interest? And I can grab that money once I get approved and start investing in properties. Yeah. Start investing in, if I already have properties, I can either fix them up, use that to rehab the property.
That could, renovation budget, 0% interest for 12 months, no closing costs. You just use the card and pay it right back, and then the bank will give you more because you paid it back. It's such a short amount of time.
Think of a fix and flip without having to put a rehab budget together. You just want to make sure that you qualify for the purchase of the property, right? So it's just a bridge loan. In that case, it's just a bridge loan, securing the property, and then you have up to $150,000 to go ahead and do the rehab, right? So that's what I would focus on personally. But you know what? Also, too, how about yourself, Darryl? Because I know that we're talking a lot about mortgages and just real estate. Has the rates being influenced, whether going up or down, etc., does that impact merchant cash advances or the business lending side a lot?
Listen, revenue-based funding, baby. Revenue-based funding. Doesn't matter really what's going on in the country. Doesn't really matter what's going on that much in politics. If your business generates revenue, you can get your revenue-based funding. You know what I mean? That's like one of the only things that, well, not only one of the only things, but it's one of the few things that I really, really do love about this industry is my industry is relatively consistent. Okay. Now, Jose deals with a little more bank financing, the mortgages, but realistically, he runs our traditional funding department. He's dealing with the bankers and the yada yada yada. His approvals and stuff fluctuate up and down depending on what's going on in the country. What I have going on, it's not really affected. But what I do want to say, and maybe you guys might feel like this is a hot take, and maybe this is off the cuff. Motherfuckers in this country right now are terrified. You know, we can tiptoe. We can tiptoe around, certain things like what's going on in Minnesota and certain things that's going on in other parts of the country, but people are terrified right now. People are terrified of the uncertainty. People are terrified. Business owners, restaurant owners in Minnesota are. I had a guy. I think he was in I don't even know what part of Minnesota he was in, but he was like, dude, he was like, dipshit. Did you read the news? Are you looking at the news? And just hung up on me. Then I looked and seen where he is, and he's in some weird city in Minnesota, but it's like Waukesha or something. It's crazy, but people are terrified right now. You know what I mean? And listen, a lot of the stuff that's going on is not really happening where we are. It is kind of, but it's different when you see it with your own two eyes, right? A lot of the things that we are seeing right now, it's just on Facebook. Lucas likes to laugh at me all the time. He's like, oh, you get your information from Facebook, but fucking everybody does, right? A lot of people are getting it from social media, from Facebook, that's because you don't have social media, from Facebook and from Instagram. It's in the palm of our hand. People are terrified right now. We have to be kind of like the buffer between what they know, and what they don't know, and try to keep the same constant thing. What the hell do you need the money for? You know what I mean? That's the one constant that we can always bring up, no matter what's going on, even if everything is burning down right now.
They need fire extinguishers. I need 1,000.
Listen,
I need to cash it, man.
What do you need the money for? And lots of people are. I'm frozen. Fuck. Lots of people are. I want to wait. Yeah, I'm back.
We're back.
Lots of people are tiptoeing around what the hell is going on in this country because nobody wants to get canceled. Like Jose clenching right now. A lot of people they don't want to discuss what's happening, and we sure as hell aren't going to discuss it either. But it's about bringing. It's about bringing. No, it's about
definitely discuss it.
Yeah, no,
in this moment,
something you gotta get off your chest.
The question was,
we'll never talk about.
No. Listen, I bring this up because again, that phone call. Again, a lot of stuff's not going on where we live, and we don't see it. But when you have somebody on the phone that you're just calling out of the blue, and you really hear the pain, I heard the pain in homie's voice. Homie's going through it. You know what I mean? And it just kind of brings life into it's like a different perspective when you speak to somebody in a different part of the country that's going through some real shit. And then I'm just like, hey, you need money for your business? He's like, dude, what? Things are happening outside my business. You understand what I'm saying? So we have to be the ones that have to, we have to act like it's not happening, and we have to speak to everybody as if we just have to not really turn a blind eye to it, but we have a job to do, and our job is to provide people with capital. But some of the stuff that's happening to some of these people that we're dealing with, we have no idea what they're going through, what they're seeing on a day-to-day basis. Do you guys feel like we have a responsibility to just keep that stone cold face? And do we have a responsibility to keep that stone cold face and just keep a straight business with these people? Should we let them open up? How are you guys handling some of these phone calls?
I to be honest, you just brought it to my attention. I haven't realized I haven't had anyone in Minnesota try to buy a property in the last couple months. And something else I noticed in DC, they fired a lot of federal workers. So all the people that live in the District of Columbia work for the government. So when they fired all these people, what happened? The property values started dropping fast. So a lot of people's property values dropped. Everyone moved out of there. People who haven't been buying homes in DC. And yeah, no one's trying to get a refi or do a fix and flip in Minnesota either. So I mean, it's definitely affecting people's pockets and their viewpoints on where they want to invest. So
Jose? Oh, Jose's trying to say
I'm just trying to figure out what conversation you had that you had to get that off your chest. But what do you mean?
I just spoke to a business owner in Minnesota. It's like, how much money?
I gotta check the recording.
Lucas, turn his headphones up. He can't hear me.
Crazy. No, I mean, listen. You have to remember that you're the professional, right? I mean, there's a lot of
That part.
definitely go ahead and you have to be sympathetic to the situation. But also keep in mind that when they're on the phone with you, they're on the phone with you because they know that you're the professional that knows what is going on. But still, there's a purpose and there's a reason why they're on the phone with you. They want answers on how they're going to get money. Now, yes, of course, listen to whatever listen to. At the end of the day, at the end of the day, at the end of the day, if they want answers on can they get qualified for a loan, right? I mean, it's plain and simple. They want to know, if I'm speaking to you, because I get these phone calls all the time. Why should I stay on the phone with you? Why should I not answer the phone call from the other guy, right? Because they get phone calls all the time. Yes, definitely sympathetic. Definitely, it's understanding the situation that he or she is in. But make sure that you monetize the time that you're on the phone with them to understand what do they need the money for? Do they even qualify?
Yo, you know what, bro? I guess the reason why
Hold on, can I chime in?
Not yet, Sexy Chocolate. 1 second.
Okay.
1 second. Listen, I guess the reason why I was so perturbed or taken aback was because I usually have my rebuttals were on fire. You guys can say anything, and then the driver hat, I can bing, bang, boom. I didn't know what the fuck to say to this guy. You know what I mean? And I was just like,
You're looking up the area code? Like, where is this?
I was like, and he just banged it on me. And I was like, fuck. And you know,
work on your rebuttals. This is the morning meetings. This is one of the things we're going to bring up in the morning meetings now. How to overcome that obstacle, that question, that objection.
Listen, but again, it's not something that we see. It's not something that's in our vicinity. But then when he said that, I was like, it just puts into perspective that life is really, really, really happening outside of this office. It is really, really happening to some people out there. And again, if we're on the phone with them, like you said, we have to be the professionals. Stone face. Listen, I know something's happening over there, but what can you use the money for? You know what I mean? It's just you can't be I don't know. We have to be robotic in some ways if we want to be able to go ahead and get the job done successfully. And, one of the sayings that we definitely have in this office is whatever's going on outside this office, you don't let it walk into this office. If you're getting cheated on, lost a dog, something like that, whenever you come into this office, everything has to get checked at the door because we have a job to do. We have a duty to do. You know what I'm saying? When we put on these lemonade polos, this is
hats now too.
Yeah, we got merch, lemoncapital.com. We have a job to do, and I guess that kind of took the roboticness out of me when he said that, and I was like, damn, you know what I'm saying? I guess that was like my little sharing moment for you guys for the week. But nah, man, things are happening and people are scared, and we have to be, I guess, the first line of defense because people still listen. Don't let it be fooled. People are still taking money in Minnesota. People are still taking monies elsewhere. You know what I'm saying? So I guess it's, we have to, help people no matter what, get access to the funds no matter what's going on. But to answer your original question, MCAs, always going to stay consistent, baby.
But now it doesn't, does that, now our MCAs, does it affect the rate? Does it affect how quickly they get the money because of what's going on or just?
Hold on. I need to chime in. You ain't rolling over me like that.
Oh.
No way.
Oh, look, he's muted. Go ahead. I'm sorry. What?
Unmute.
Go ahead. What's
We
up?
heard you unmute.
Yeah, Sam.
Just go.
You keep muting him, but why?
I thought you said that we can't hear. That people can't hear him. Yeah. Go ahead. Let's keep going.
He can speak for 2 seconds, bro.
Oh, all right.
Go ahead.
So there you go. We'll type your response. Sally? Okay. All right. Jose, run with it.
Stan, where you at?
Because had to stop the whole broadcast. All right. So next topic. So refinances and common mistakes. Joe, lead us into this.
All right. Question: why did mortgage refinances slow down? I mean, we've touched on this topic many times. Rates were low from, I would say, 2018 to early 22. Rates have been pretty low. So if you had a 3% rate, 3.5% rate, why would you want to refi into a 7%? I mean, it would be a dire straits. You would have to really need the funds for something important. I mean, it just didn't make sense for most homeowners. So people have stayed locked in those rates. And that's part of the reason why there's not even like a huge inventory of homes to buy, because no one's really leaving their homes or wanting to sell their homes. So people aren't building new homes at a alarming rate. People are not trying to leave their homes, because why would you want to double the rate you're paying on your 30-year term? So, of course, refi slowed down, but now they're starting to pick up because rates aren't in the mid sevens. They're coming down into the sixes, even to the fives for some people. So, yeah, that's the reason. So,
Gotcha. Joe, do you think that there's anything that borrowers can do to, I guess, like speed up the process, or I guess like cut off some of the lag time, or get like a speedier clear to close date? Like, is there anything that they can do on their end?
just communicating, get your docs over. I let people know from day one, listen, if you want to really speed up this process, this is what we need. So a lot of times people drag their feet. Conditions change. An underwriter might ask for something new. There might be something wrong with the original docs you sent over. So a lot of people kind of they're slow with getting docs over, and then they will complain, why can't we close this? But it's an ongoing process. You have to be able to communicate. If I can't get in touch with my borrower, if they're just too busy, then I'm like, you're gonna have to wait for this loan to close then, because can't do it without you. I can't find your documents on your computer for you. So people, you have to be involved in the process. If you're looking to get a loan for hundreds of thousands of dollars, you have to be involved. So I would say a mistake a lot of people make beyond just being in the process of getting their loan done is waiting too long for rates to drop and missing out on amazing deals that are right in their face. Sometimes people have a great deal. Like, I had a guy a couple years ago, $800K purchase in Harlem. The seller was going to cover all his closing costs. He just had to put 3.5 down. And he's like, I'm going to wait for the rates to drop. And I'm like, bro, you're in New York. The closing cost was like 60, 70,000. So you're like, it just made no sense. He's like, I'm going to wait for the rates to drop. And it didn't happen for 3 years. The rates never dropped. That deal is gone.
Yeah.
The value, that property was $800K, went up to like $950 in like a year plus. So now it's a much bigger purchase price for a similar property. And no one else is going to cover that man's closing costs. Like, he never bought a property. He never did. So
it's so funny you said that, because Jose had a guy that was approved for 90. This one, the MCA side, $90,000, 18 months, and he was approved just after Thanksgiving. Guy said, "No, I'm good. I'm gonna wait till the new year." And we submitted this guy today, trying to get him approved, and he is getting shot down everywhere.
Yeah.
You know what I mean? And Jose is looking at the declines coming in from the lenders, and he's like, "Damn, yesterday's price is definitely, not today's price." Shout out to Fat Joe, but Jose, why did that guy? What's the intricacies of that deal? Why did that guy not take money at that time? Because I think he was pre-approved for traditional, wasn't he? Or no?
He was actually pre-approved for both traditional and alternative. He needed cash for a closing that he's in the real estate space. So he needed cash for the closing. He thought the money was too expensive, even though it was a line of credit. But now he came back. I guess he needs the money to close on the deal. Maybe he probably thought he was getting it elsewhere. Now he needs the money to close on the deal. But one of the declines read that he currently either had liens, judgments, or there was a bankruptcy on his report. So situations changed,
and that was not on the denial list in November,
because his credit score went from a 750 to a 683 or 689. But even with that, he knew, because when he texted me, he said, "Hey, is that money still available?" I said, "Well, your credit score dropped. You have to remember, things have changed. There's a reason why your credit score dropped, but things have changed. But I will try to go ahead and work and make sure that I can get you the same approval." Obviously, we're unable to go ahead and get the same approval. We're unable to get the same approval because of the situation. I think also his sales dropped a little bit, and the average daily balances, he had a few negative days as well. So the business revenue dropped. The daily balances dropped as well. So now, we're lucky to go ahead and even probably get some sort of an approval for the client.
What's happened with a lot of clients that I've dealt with the lines of credit.
Mm-hmm.
now all the banks are asking for almost a full doc profile. So I've had like 10 people come back to me like, hey, can we get that line of credit now? Blah, blah, blah. And it's like, you don't have business revenue. Now the banks want 4 months of revenue, 20K deposits each month. Some banks want taxes, business taxes with a good amount of revenue for 24 and 23. So for a lot of people before, we're able to get these bank lines of credit with minimal docs, and they're like, I'm gonna wait, I'll see, and it's gone. It doesn't exist anymore.
And honestly, Joe, that goes to like Lucas and I were talking about, like, just today's topic and stuff. But one of the things, and I think you guys heard about it, was that President Trump is trying to put a 10% rate cap, right, on credit cards, correct? Mm-hmm. So now, what do you guys think that's going to happen to 0% interest business credit cards? Obviously that's an introductory rate. Yeah. But is that now going to eliminate 0% cards? That can be a possibility, if anything, because now, think about it. Rates right now on an average are around 19.75 to 23.8 national average. Yeah. If they go ahead and now put a cap on it where you're at 10%, I mean, what do you think is going to happen?
I mean, maybe the banks can't even afford to do 0% for people. If they're already dropping rates from 20 to 10 for everyone, maybe they'll say, hey, why should we give out these 0% cards? Or they can't. It doesn't make sense for their balance sheet,
Well, I feel like at no matter what, 0% is 0%. I don't care what the hell their rate they're lowering or they're capping our interest rates at. If I tell you it's interest free for 12 months, you better take that.
But what if the banks get rid of that, though? If they have to drop the rate for everyone to 10%, they're still going to offer 0%?
You have to. You want to know why? It's the same thing as a free trial. Same thing as a free trial. Why would anybody say, hey, listen, take you have a 30-day free trial, and then after that we're going to bang you for $19.99 a month, or bang you for all 12 months up front. It's kind of like the same thing. Yeah, listen, you're going to take this 0% now, and then at the end of the 12 months, yeah, you're going to pay it. They still have to everybody has to have an introductory product. You know what I mean?
So does that mean that they're going to remove more people from qualifying, right? Because if
make it tougher,
right? Because now, I mean, if you don't have perfect credit, and you have mediocre credit, let's call it, then you would normally qualify for a credit card with a higher rate. Yeah. Right? So now that it's 10%, do you think that less people are going to qualify for cards, and now only clients with a certain credit score will qualify for it?
I mean, what you know what? And I don't want to answer a question with a question, but let me propose this to you. Right now, what's the qualifications for a 0% interest business credit card?
We say 680, but on average is 700 score.
Okay. What else?
700 credit score. Overall credit utilization has to be 20% or less. Mm-hmm. No derogatories, no latenesses, no more than 3 inquiries in the last 90 days.
Gotcha.
And they have to have at least 2 personal credit cards with a $2,500 credit limit or greater. To show that they can manage the if they get approved for $20,000, $30,000 on the business side, which that's an average of what they qualify for, they want to make sure that they can handle that money responsibly.
So riddle me this, Batman. Mm-hmm. So if they're gonna make it harder for you to qualify, right? What do you think they would possibly make the qualifications then? Because when they raise the credit score requirements, they're gonna raise they're gonna lower the utilization requirement. Like, you know what I'm saying? Like what?
No, people just wouldn't qualify because they don't meet the criteria. The reason why people, at least this is my input, the reason why people just in general qualify for other cards is because they're not up to, if their credit score is not up to par, they qualify for higher interest credit cards. Yeah. Right? And they're not going to qualify for 0%, but now if there's a cap, they can't go to that 23, 24%. Right? Now it's at 10%, so does that mean that now less people will qualify for it?
You know what I wanted to ask you, Jose? What's the qualifications just for getting just a business credit card? Not 0%, just like an Amex or something like that. What's the qualifications for that?
Those are charge cards, right? A lot of business owners qualify for charge cards. American Express offers them, but they still need to have a 680 score. They don't necessarily have to have the credit card, right? 25. I had a client, he got approved for an American Express Gold charge card. Now, his credit limits on other cards, personal cards, were 500, 600, and I believe one of them was 1,000. Right now, that wouldn't traditionally qualify you for a 0% interest business credit card. but he did qualify for a charge card, even though he had a 680 score. He had everything else, no latenesses, no derogatories, no inquiries, but the credit limits weren't there. So he qualified for a charge card. Now, the charge card basically means that you use up, well, let's say it doesn't have a limit, but let's say you use $10,000. You have to pay off the $10,000 in 30 days. Okay, so that really becomes now it's not like a regular credit card where you can pay it over a certain period of time or make the minimum payment. You have to make the payment for the full amount at the end of the 30 days.
Mm-hmm. So you think, and just to kind of wrap up the little credit card segment, but so you think that with capping the, I guess, the credit card rates at 10%, you think that innately that's gonna, I guess the bank's little caveat for that is gonna just make it harder for everybody to qualify?
No, I think that it's gonna make it hard. Well, yeah, I guess so. The harder to qualify
like
for
banks
clients.
do whatever they want, though.
Yeah.
That's what I'm thinking. That's what I'm thinking.
Honestly, quarter to quarter, sometimes month to month, we just find out there's completely new guidelines for these programs. So who knows what's gonna happen? Honestly, we've seen it many times, So who knows, really?
All right. Well, listen. I guess we just have to find out.
Stanley, we're gonna wrap it up soon. Is there something that you wanted to say before we start getting into the? Perfect. All right.
Okay.
All right, Jose. Final segment. Take us away.
All right. Just how does inflation affect borrowing? Right. Is it affecting it? Does not affecting it? The higher cost of living, or is it higher? Just business costs. Is it going to reduce it? Is it going to increase it? And also too, is the higher? Is it going to cost more to qualify for a mortgage? Right now, I guess inflation, and this goes back to the question we had before, Joe. Is it the Fed is raising the interest rate or capping the interest rate as far as being raising it or lowering it?
Well, they raise rates to kind of combat inflation because now, I mean, are they really using the money for what they say they will? Who knows? But if the Fed is raising rates, they're collecting more money from Americans, so that should combat inflation. I think it's part of the reason why inflation is an issue now is because rates were so low for so long, so people were just borrowing a bunch of money. Bunch of debt was being put out there. Americans received a bunch of money. So of course it's going to be inflation when everyone could borrow money, everyone's receiving money. The value of the dollar is going to drop. It's just common sense. But we'll see with inflation. The Fed's doing everything they can, government's doing everything they can to combat inflation. So just got to see if people do their jobs.
Well, I'll tell you. I'll give my little business funding analysis of this. Inflation right now is really it's increasing the odds that our merchants want to buy in bulk, right? Or they're trying to save wherever they can, right? That's the main thing right now. Everyone's trying to cut costs, save whatever they can. So I am noticing that some of my regular clients that usually take money twice a year, you know what I'm saying, is now taking it once a quarter. You know what I'm saying? Just a little more frequent, just trying to save wherever they can. You know what I mean? We have a one of the places that we fund is a cell phone store. And usually, June, December, this guy usually, tends to re-up. Now, like every 3 months, he's trying to place like a bulk order because, if he pays it off early, he ended up paying a 118, which is 18 cents on the dollar. And the sell rate initially is a 140. So to be able to go ahead and save 22 cents on the dollar for go ahead and paying it off early, a lot of these guys are really, buying in bulk right now. That's what I can see, on my end. But Jose, how does inflation affect, I guess, you on the traditional side? Does it really move the needle at all?
Not at all. Money is still flowing. To be honest with you, business owners are still using, it's, as long as they have a plan, right, of what they're going to use the money for, and there's a return on the investment, it really just makes sense. Even on the mortgage side, if they go ahead and just whether I'm a firm believer that even if you have a low rate, but it's going to help you out, right? You can have personal loans, credit cards that are very high interest rates. As long as it makes sense for you to take that money out, right? Even if your mortgage payment increases, as long as the payment makes sense for you to cover whatever it is that you're going to cover, on your personal side or whatever debt you have to pay off, as long as that makes sense, it doesn't matter if it's 3%, 4%, 5%, or the rates are even higher, but it has to make sense. And this is why we go back and we always make, Darryl earlier was pointing out, what do you need the money for? Right? As long as you have a plan. And when you speak to these clients, what do you need the money for? What are you going to do? Just because he or she says they want to refinance, don't just dig into that. Why are you looking to refinance? Right? What are you going to do with the money? If I give you $100,000, what are you going to do with it? Because if their if their mortgage payment is going to increase, then they have to be able to justify it. So always ask, what are you going to do with the money? Even if it's a HELOC, there are HELOC options if the client qualifies for them. I had a client that needs another extra $150,000 because they're going to do an extension on the property. What is that going to do? Then once the extension, they put the extension on the property, it increases the value, right? So he understood that when he came to us. The reason why he looked for an alternative program was because he switched jobs from W-2 to 1099. So that didn't allow him to qualify for something traditional. So his revenue dropped. But it made sense to him to take that extra money, make that extra payment, increase the mortgage payment, and he was willing to go ahead and pay off. I think his mortgage payment was only $1,900 because his rate was so low, but adding that extension to the property was going to increase the value of the property later on. So there was a reason, but there was a purpose for the money. It wasn't just take out $100,000 and go ahead and bet it on black or something, in the casino.
He's like, in the casino.
Yes, in the casino. Bet on black. In the casino. Listen, but before we do wrap it up, Jose, I gotta put you on the spot really quick.
Yeah.
You don't gotta blush. It's okay. Me and Jonathan overheard you on the phone today. Said you were talking about some program over there on the couch about like they could have.
We're not ready. We're not ready for that one yet.
Come on, bro.
We're not ready for that one.
Nah, bro. You know about it, Joe?
Nah, I don't actually.
No, because then everyone's just going to start asking questions, and we're not ready. We're actually doing. We're trying out. It's a beta program that we're working on right now, where, and I think this is what you're going to ask me. Now, this is a HELOC, right? A second position, no credit score requirement, and there's no payment on the mortgage for a certain period of time.
What's the minimum and maximum?
Yes,
the rate.
Listen, it's something that we're working on right now. There's a client that I'm working with right now to go ahead and just understand the process, understand just questions like that.
Yeah, but hold on, but time out. But what did you say that piqued my interest that made me turn around and go, yo, Jose, what did you just say? How long was that guy able to put payments off for?
A very long time. I can't tell everything. People are gonna just start Googling it.
You can't give out the sauce.
Yeah. Once we have it locked in and everything is there, we definitely want to roll it out. I think it's a great program, but we just have to understand the program so that to make sure, because at the end of the day, you want to make sure there's a benefit to the borrower.
Well, listen, you know what? Well, I guess, ladies and gentlemen, if you want more tips, join our Brokers Connection group. Watch a deal room. Links are definitely going to be in the description. And I guess Jose is going to leave little breadcrumbs, little tidbits. As we get more information and we do the official product rollout,
correct,
you guys will definitely be the first to know and be able to take advantage of it. But final thoughts. Joe, you want to take us up out of here?
Great time talking about mortgages. I really enjoyed it. But like I was saying before, when it comes to real estate, mortgages, great time for an investor. If you want to buy an investment property, the rates are almost the same as the FHA or conventional. And with investment loans, we're not asking for your taxes. We're not asking for your W-2s. There's no debt to income ratio. You're not going through all the hoops. So great time to invest. Don't hesitate. Look out there for deals. And for people in the community, get out of your comfort zone. If you're looking to find more deals, talk to anyone. Find real estate groups. Find any type of groups where financial professionals meet up, and don't be afraid to start conversations and talk. You don't know who you're going to meet. You could just find $1 million deal out of nowhere. You never know. So, get out there and hustle, everybody. That's my 2 cents. And I'm
man.
All right. All right. Mine would be is learn the products, right? It's 2026, January 2026. Learn the products. And the reason why is because guidelines change every month. Programs change, whether they update, whether they get better or worse. You want to know what programs are out there because you don't know what type of client you're going to meet at a networking event, what type of client you're going to meet on a Facebook, let's say, group. But understand the products so that you're able to present all options and be able to stand out. right? Stand out in a group of individuals that possibly potentially do something similar as far as the industry. If you're in a mortgage convention, right, you want to be able to stand out where you can present the product that a lot of these mortgage professionals may not have access to. So knowing the products definitely plays a big role in your success. And yeah, that's it. Best of luck.
All right, ladies and gentlemen, we're gonna Lucas get the music ready to go. Don't play it prematurely. You know you like to go fast. Listen, ladies and gentlemen, really quick. Whether it's a mortgage, MCA, or just a business loan, money's flowing, and the only way that borrowers are gonna be able to go ahead and prosper is if they have their numbers right, they have clean files, and if they act fast. Don't wait. Plan, apply, and close. And I definitely just want to leave you, ladies and gentlemen, with this little tidbit. Again, be a little more cautious of the leads that you're calling and where people are in the country. We have no idea, again, what people are going through. Be diligent, be firm, be an expert at your craft, but also know that there's some people out there that is some real shit going on on the other side of that phone, and you have no idea. But just be a professional, keep everything short, sweet, good to eat. Make sure that you know your facts, and you're still gonna make money. And today, you can still make money right now, no matter what's going on. I haven't been apprehensive on the phone, with a certain region since I think the California wildfires. You know what I mean? Like, we were speaking to people over there, and people had some real stuff going on, and people are losing their houses and stuff like that. And we're cold calling, and not cold calling. We have warm leads, but we're calling people in California that have some real stuff going on. So just make sure that you're looking. Before you get on the phone with somebody, make sure you know where they are in the country. Make sure you have a little more care when you're dealing with them, because, again, you don't know what people are going through. And I'm going to lead you, ladies and gentlemen, with this. Something that I posted on my Facebook. Lucas doesn't like when I talk about that. But the most dangerous thing about human beings is that they look for a way to be cruel, and then they find a way to make it acceptable. Next time you guys will be speaking to us, we'll be in Black History Month. Stanley, bow!
The Deal Room by Brokers Connection.